Okay, our next speaker. Petr Horák, product manager at Invity. Petr is a seasoned product manager who embarked on his Bitcoin journey several years ago, building a safe and simple mobile app friendly to newbies, which is super important. So I'm looking forward to hear what you have to say. We have to help spread the message of Bitcoin to newbies. Please, Petr. Good luck.
Good morning. I'm Petr Horák. I am Bitcoiner with 8 years experience in Bitcoin. I'm also a product manager. For the past 2 years, I've been working at Invity, developing a mobile app designed to onboard newcomers to Bitcoin. Today, I will tell you my story, how I got into Bitcoin, what I've learned, and what I would recommend to myself. My story begins after a few years. I first heard about Bitcoin and ignored it. It was 2016, at the end of the bear market, which was largely influenced by the collapse of Mt. Gox. Mt. Gox was the biggest and first significant Bitcoin exchange at the time. After I dig deeper into what Bitcoin is and learned what it stands for, how it works, I was ready to buy. But the price kept rising. And I was fixated on the amount of Bitcoin I wanted to own. I thought to myself, I'm not going to buy 30, 40, or 60% less than I could have bought just a few weeks ago. I will wait. It will drop like before. I will wait, and then I will buy as much as I wanted, or even more. But that didn't happen. Suddenly, there was new all-time high, and Bitcoin was stronger than ever. Gradually, I felt like I was missing out. The price was rising faster and faster, and the FOMO, the fear of missing out, was kicking in. I was feeling physically sick. I couldn't take it anymore. I literally felt like Bitcoin will be worth 100K in just a couple of weeks or even days. That's how extreme I was feeling the FOMO. So I pulled the trigger. I finally bought. After Bitcoin grew almost fivefold. Did it go to 100K next? Of course not. It dropped 40% in the following weeks. What an opportunity that would have been, right? If I waited just a little more. But let's be honest, as a complete beginner, I would have probably believed it would drop even further, and I wouldn't have bought, only to end up buying at even higher prices later on. That's how market psychology works. If I had been practicing dollar cost averaging right from the start and had some Bitcoin from the start, I probably wouldn't have had such FOMO. And who knows, maybe I would have even bought more during the correction. My first purchase was actually peer-to-peer. At the time, I didn't own any wallet, let alone hardware wallet. I knew they existed. I knew Trezor. I knew there were different solutions. I knew that there were hardware wallets, software wallets, custodial or self-custodial wallets, but I didn't own any. So we arranged a meeting, exchanged money, and I had my Bitcoin sent to BTCE account. BTCE, relatively popular exchange back then, but though not as big as Bitstamp, Coinbase, or Bitfinex at that time. But BTCE allowed peer-to-peer exchange or transfers between accounts. So I had my Bitcoin sent to my account, and in the meantime, I ordered Trezor, so I could send them to my wallet. And it's a good thing I did. Just a couple weeks later, BTCE domain was seized by FBI, and the whole business was shut down for illegal activities. I could have lost everything right from the start. We shouldn't underestimate self-custody. We should prioritize it as much as possible and make it priority. The 2017 bull run was legendary. Bitcoin grew over 100-fold, up to $20,000 per Bitcoin. Ethereum, the second largest cryptocurrency and the largest altcoin on the market, rode the wave with it, leading the very famous ICO bubble. ICO stands for initial coin offerings. It's similar to what we have in traditional finance called IPOs, initial public offerings, which allow companies to become publicly traded companies on the stock exchanges. ICOs were similar. They allowed projects to raise money in exchange for newly created tokens. Some very bizarre projects emerged. One of the legendary examples is Dentacoin, which was meant to allow payments to dentists with a token. What a brilliant idea, right? What a use case they solved with the token. Another one was some project that raised money to research and cure cancer. Apparently in 2017 you needed a token to cure cancer. In most or the vast majority of these so-called projects were outright scams. But in mania, the fundamentals don't matter. You can make money on almost anything. It wasn't much different from what we experienced in late 90s and early 2000s in the very famous dot-com bubble or internet bubble. It wasn't very different in this regard. You could raise money, you could raise tens of millions of dollars with a single one-page website and a promise. That's how crazy it was and how easy it was. Everyone was making money, including me. I bought some tokens in hopes and coins in hopes for quick profits to make more Bitcoins. This is a real headline that mainstream media posted. Everyone's getting hilariously rich and you are not. This is also a real post of Katy Perry that she posted to her massive follower base on Instagram, her crypto nails. Now, very legendary post. This is a true showcase of pure mania and euphoric cycle of the market. Markets are forward-looking. There is always some narrative that is driving the market forward, something that the entire market focuses on. Bitcoin has always been about adoption, institutional adoption, opening the doors to traditional finance, bringing in massive capital to sustain long-term price growth. Institutional and mainstream adoption is a theme in every bull market. This time, the narrative was that the CME, the largest futures exchange in the world, would launch Bitcoin futures. Futures are financial instruments that allow people and institutions to bet on the rise and fall of an asset without owning the underlying asset. So the narrative was set. December 17th, 2017 was the date, was the magic date. They launched. And perhaps some of you can guess what happened next. This was the peak of the cycle, and Bitcoin dropped 84% in the following year. Altcoins dropped even more, many of them by over 99%, and never recovered. Unrealized profits were lost, and attempts to make quick profits to recover some losses didn't help either. Like many others, I ended up with almost nothing, but my belief in Bitcoin didn't change. It was actually stronger than ever. But I had to start over. I orange-pilled wherever I went, but no one listened. No one believed Bitcoin will ever recover. Mainstream media declared Bitcoin dead or that it will go to zero. But mainstream media feeds the public, and no one from mainstream believed Bitcoin will ever recover. Taking profits during peak mania isn't shameful, and trading is a losing game for most people. Only about 1% can consistently make money day trading over a period longer than 5 years. We should invest long-term instead. Fast forward few years, and Bitcoin was popular again. What a surprise. Who could have predicted that, right? Definitely not the mainstream media. This time, in the bull market of 2021 and 2022, Bitcoin was again about institutional adoption, or adoption in general. This time, Coinbase was set to do IPO. Coinbase wanted to become a publicly traded company. Coinbase is the largest cryptocurrency exchange in the United States, and this event, in the eyes of the market, was seen as an important event because it legitimized the whole Bitcoin and crypto industry. Until then, there was uncertainty whether Bitcoin would be outlawed or regulated to the point it would become unusable. And US is the largest market. Everyone looks at them and often follows their steps. The IPO was scheduled for April 2021. And it proved to be a significant event for the market, after which Bitcoin corrected big time. The last nail in the coffin for this bull run was the launch of first significant Bitcoin ETF, exchange traded fund. It was futures ETF, which again was a seldom news event, after which, at the peak of the cycle, after which Bitcoin dropped over 77% in the following year. This time around, Coinbase and Binance, the largest crypto exchange in the world, had some serious competition. FTX, founded by Sam Bankman-Fried, who previously worked at Wall Street and had great reputation. FTX was founded during bear market of 2019. FTX quickly rose in the rankings, quickly becoming the #1 exchange for the retail, competing with Binance for the #1 spot in popularity and traded volumes. They were strong, everyone believed them, everyone trusted them. And they were everywhere. They were sponsoring major sports arenas. major sports teams, F1 Formula One team, the biggest esports competitions and leagues. They even had Super Bowl ad. Every major sports and Hollywood stars were in their commercials. They seemed invincible. Everyone trusted them. But it ended like this. Almost 9 billion customer funds were embezzled, practically stolen, including some of mine. I couldn't avoid it. As the saying goes, only trade what you can afford to lose, or only keep on exchange what you can afford to lose. It wasn't significant amount, but it reminded me and everyone else that we should prioritize self-custody. The collapse of FTX significantly contributed to the already strong market depression during the end of the bear market, after which Bitcoin turned for better and recovered greatly. So what advice would I give my younger self? Practice dollar cost averaging to eliminate fear of missing out. It cannot be eliminated completely. We are humans, after all. Prioritize self-custody as much as possible. It's not always possible, especially for beginners. But we should prioritize it, we should learn it, and practice it. And third, mania and market depression offer the greatest opportunities. Before we wrap up, I would like to invite you to our booth, where you can learn more about our app, what we do. We are part of Satoshi Labs. It's the booth right in the middle. We would love to see you there. Thank you for joining me, and enjoy the rest of the day.